to our video covering the 5 simple truths every real estate investor should know. This is a presentation of the Southwest Florida Real Estate Investment Association. You can check us out on the web at www.swfleia.com. The purpose of this presentation is to give somebody the right overview or narrative, if you'd like to use the word, for real estate, because a lot of people, I'm going to say this, get caught up in what I call the guru mindset, and they really forget the fact that they're entering in a business that's governed by math and rules. And this should give you an overview, particularly if you're new at real estate. You'll gain a lot of insight from this video. If you've been around the block a few times, this will probably remind you of what sometimes what we forget. Who am I? I'm a real estate investor. I'm one of the founders of the Southwest Florida Real Estate Investment Association. I'm also a real estate agent with Steelbridge Realty. I've materially participated in rental properties, waterfront spec homes, buy and flip transactions, as well as in a former life I originated about 1,000 mortgage loans. I also do analytical and consulting work for the capital market and private equity funds. This presentation was really inspired by Benjamin Graham and R.N. Elliott. If you've never read the book The Intelligent Investor, you should go to the library and get it or buy it. It's a great book. It's truly what inspired Warren Buffett. And bear in mind, I'm not a stock guy. I've played in the market a little bit, but it's just not something I do. And while watching the swings of the real estate market, I realized that the stock traders understand cycles better than we ever will, so why not borrow their experiences? Okay, the number one question you got to ask yourself is, are you an investor or are you a speculator? Investors, through sound analysis, acquire undervalued assets or acquire assets which give an acceptable return. The investors then return the asset to its true value. This is done through thorough analysis that promises safety of principal and an adequate return. Now, you don't always have to buy value. I know some guys in the RIA who buy single-wide, double-wide mobile homes who, for the right property, will happily pay market because it yields them somewhere from 15 to 30% a year cash on cash. So you don't always have to get a good deal. Sometimes you can invest and pay retail and do really well, but that's strictly determined upon the rate of return from the cash put in play. Okay, speculators. Operations do not meet these requirements are speculating. Speculating is basically gambling. Everybody in 2004 through 2006 here in Southwest Florida called themselves investors, but they were basically speculators. Okay, most are in foreclosure now. A few of those guys are still holding the bag. There's 2 times you should not speculate: when you can afford to and when you cannot afford to. Simple truth number 1: real estate is not a commodity trading or get-rich-quick scheme. It is a business. You are choosing to be in the business of real estate investing. Now, there's a lot of ways you can do this, and I've got another presentation we're going to do, and we kind of have a running overview that there's 3 kinds of guys you're going to meet in real estate. There's investors, and there's traders, and then there's the players. Investors, they put a sum of money in motion, deploy some money, and they get an acceptable return based upon the money. Traders, they buy undervalued real estate, fix it up, and sell it. A lot of people want to call that investing. I call it trading real estate. We do that, so I'm certainly not knocking it. And then there's the players, the guys that think they know what something's worth, and then they go from there and there. The really key to understand this is you're getting yourself in the business of real estate investing. Simple truth number 2: the market is a pendulum that forever swings between unsustainable optimism, which makes real estate more expensive, and unjustified pessimism, which causes real estate to be cheaper. The intelligent investor is a realist who buys from pessimists and sells to optimists. Now, really take a second and read that screen, because that screen should tell you how you should govern your investing and how you do it. The most wealthy people that I know buy at the bottom of a crash, hold through the entire next cycle, and sell at the top of the next cycle, which kind of coincides for a lot of people with retirement. But I've watched some people doing it. I'm watching one of my mentors do it right now, and it seems to be the best way that I can prove to make money in this game. Okay, when it comes to simple truth number 2, there are a lot of modalities to this. Individual market conditions and demographic factors may cause these swings to be broad or limited. The recent cycle is probably one of the most aggressive cycles you're going to see. There are some other cycles in history where the rising and the falling wasn't nearly as much, and that's what you have to lay over as a narrative over what market you're working in, whether it's up or down, and really look at the past. The past will generally tell you what the future will do. Here's a quote I love, R.N. Elliott. Civilization rests on change. This change is cyclical in origin. A rhythmic series of extreme changes constitutes a cycle. When a cycle has completed, another cycle is started. The rhythm of the new cycle will be the same as that of the previous cycle, although the extent and duration may vary. To put this in colloquial terms, it's really all the same, only the names change, as Bon Jovi sang in the 90s. Simple truth number 3. The future of every investment is the function of its present value. Okay, and really understand that it is what it is today. If you're betting on it being something else that it isn't today, basically you're speculating. And you always have to understand, the more you pay, the less of a rate of return you will obtain. And in English, for most of us, you really make your profit on the buy, not on the exit. And that's always it should be in the background, is that you make your money on the buy, and you obtain the money you earned when you bought upon the exit when you sell. There are a few exceptions to the rule for number 3. You can buy a piece of property and sell it at a higher entitlement. Anybody can you think of another one on making money without speculating, because investors, we do not speculate. There's a lot of ways to do this, which truly adding value is, but you have to realize, always examine, what value am I adding to make the money in this deal? That'll tell you how much speculation is in your deal. Simple truth number 4, no matter how careful you are, and you're talking to a guy that when I do business in real estate, particularly in Lee County, I have every MLS sale from 2001 till today in Excel, and I generate my reports based upon those timelines. And with that, I still can make mistakes, because no matter what, you can't know everything. An intelligent real estate investor insists upon a margin of safety. And here's the real key to this: no matter how exciting the investment is, or more importantly, the person selling it to you is, what you want to do is, whenever you're entering into an investment, if you're starting to feel excited about it, that's always my tipping point to take a step back and take a look at it. I almost approach each deal with the mindset of the deal has to convince me to buy it, and it's all about the numbers. If the numbers don't convince you to buy it, if there's just something about the house that gets you excited besides the simple math, then you really need to take a step back and take a look at what you're doing. Simple truth number 5, and this is the key to life: the secret to success is inside yourself. Become a critical thinker. One of my favorite quotes is anybody who exclusively has positive advice is probably a charlatan. Sometimes you're going to get some constructive criticism. Sometimes it's going to be a little negative. Some of the greatest criticism I had has been negative, but then again, some of the greatest criticism, and then after that, you need somebody that's positive to pick you up. But there's some times in life where you don't want to hear what's positive. I had somebody talk me out of. I had 5 contracts on some property in early '07, and one of my mentors sat me down and kind of boxed my ears, and the reason why I'm still functioning today is because I did not close on all those contracts, and I really thought the market had bottomed. I ended up buying 2 properties, but those 2 properties haven't destroyed me. So don't take facts on faith. I question everything. I vet everything. If somebody tells me what a price is, I generally go and look, and I see what things sold for myself in public records. I don't want to burden anyone with my failure. I'm going to entirely understand what I'm doing when I'm deploying my treasure, and it's all my due diligence, no matter who's in the deal or who I'm working with. And you got to have discipline, and you got to have some courage to play this game. Always remember, boom times are time for courage. Okay, bust times are time for discipline. Okay, by doing this, you will not be swayed by the swings in the market, because in the end, it's how you behave is much more important than how the market behaves. Here's another thing. You always want to look at what the intrinsic value of an asset is. And I kind of go back to what we called the boom years here. Everybody was pitching condo hotels, and I just sat it down, and they were ready to put a bunch of us on a plane and fly us on a private jet, and it was all pretty exciting. Again, the emotion kicked in. I got excited, so I took a step back. And I really took a look at this condo hotel, and I was like, what's its intrinsic value? Because it's not quite a hotel and it's not quite a condo. Intrinsically, in my mind, it had no factor. Now, a friend of mine bought into that, and he ended up losing it, and nothing of which was promised came true. And it really, it never passed the intrinsic test. And it just wasn't simple. And what I'm finding is simplicity is one of the biggest factors to your success, whether it's in your math, your business approach, what the function of your investment is. Thanks for watching this video. You should check out the association's website. It's www.swflreia.com. If you're local, we'd love to see you at a meeting. You can also reach us at 239-671-8248. Thank you for watching this, and I hope you have a great day.